Hi, and welcome to Always Up IT and Risk Management Partners webinar, Business Continuity Planning. Today's title is Bringing IT and Business Together. I guess the question we should answer first up is, why do we need to bring IT and business together when it comes to business continuity planning? I think a very common reason is because often IT and the business don't speak the same language. It's similar with business continuity professionals. When we speak business continuity language, we're not speaking the same language as the business, and often our point is missed. The other reason is the often misconception that BCP is really just about IT systems, whereas BC professionals certainly understand there's a lot more to it than just getting your IT back up and running. So hopefully that sets the scene for today. In terms of the overall agenda, I do want to talk about what is BCP so they're all on the same page. Go through the background of why BCP, which will help you sell it later. Discuss how best to get the buy-in from the business, what is an effective BCP framework, and then finally we'll finish with some global trends in business continuity planning. In terms of business continuity, I like to think of it across these four stages. There's no doubt that emergency management is a discipline of its own, but business continuity planning needs to sort of connect well with emergency planning. So once we've gone through stage one of protecting life safety, the next thing we need to do as part of business continuity planning is assess the extent of damage so we can make decisions about business recovery. And of course, stage three, therefore, is making some kind of taking action to restore operations to some level, while longer term planning for full restoration to normal takes place. So that's what I refer to when I talk about business continuity. It just takes the tail end of stage one of emergency response and flows through to return to normal. You would have heard many of these terms, and I'd just like to make sure that we're all on the same page of what they mean. Well, risk management is a very broad coverage of how we manage uncertainty in our business, and business continuity planning is certainly a subset of risk management. It's a risk treatment for the risk of disruption. Emergency response, I've already mentioned. That's specifically those early actions after an event occurs. Disaster recovery is now the domain mainly of IT, so people talk about IT DRPs, IT disaster recovery plans. So that's normally where we'll hear the words disaster recovery. Contingency planning, on the other hand, is planning for a specific event. So if you live in far north Queensland, for example, most businesses have a contingency plan for cyclone. The problem with contingency plans is you can have a whole bunch of contingency plans for your business, and of course, whatever you've planned for, the 25 plans, whatever hits you won't be one of those. It'll be something you haven't thought of. So hence, business continuity planning is much more about a broad coverage, being able to respond to any kind of event within reason. The next two, incident management and crisis management, for me are closely linked, and it really comes from your background as to whether you use the term incident management or crisis management. They're both about managing the strategic issues around something that's happened. It could include a physical disruption to the business, or it could, just as an example, be an incident such as the mining company that lost 7 executives on the one plane in Africa some years ago. That's certainly an impact on the business that needs to be managed, but there's no physical disruption. Now, incident management is the term you'll use if you come more from the emergency management space. Crisis management is the term you'd use if you come more from the public affairs, public relations side of things. Now, organisational resilience is a relatively new term. It's come along mainly since September 11 disaster and other terrorism impacts, and it really talks about being able to respond even with major impact. And it's really grown mainly in the critical infrastructure areas, so water, power, telecoms and the like, where society needs these things to function, and so government has invested quite a bit in ensuring those organisations do think about resilience. So that's where you'll mainly hear the term organisational resilience. Now, why business continuity planning? Well, I don't think I can say it any more simply than this, because it is a good management. I mean, we plan, and we should plan at least, for potential changes in the economic environment, staff turnover or loss of experienced staff, maybe retiring. We plan for these things. Why not plan for a sudden disruption to our business? We know they happen. It doesn't take too many people in a room before you are almost certain to find that at least one person in the room has had a significant disruption to their working life. Okay, so good management. What are the challenges for organisation that disrupt our good management? Well, risks abound, whether it's from safety or property, managing the risks around travel, even dining. If you're travelling into dangerous areas, dining can be a problem, as can third world countries just with getting sick. It'll also be reputation damage for organisations that have in-house functions and bringing in their guests. You don't want any food poisoning of guests, that's for sure. So risks abound for organisations, and our main response comes under the heading of governance. Most people would be familiar in operating business these days of the term governance and generally what it means. Well, I'll just show you this public sector view of governance. The reason I'm showing it to you is not for all the different elements that are being shown here, excuse me, but to highlight the one in the middle there, risk management, encircled in red. And it's shown as one of the foundation stones of the public sector house of governance. Now, this is a 2003 document, but the Governor General at the time, Pat Barrett, who this was from one of his speeches about that time. I've read speeches of his from 1983 where he talked about risk management as a cornerstone of good governance. And of course, business continuity planning is an element of risk management, so it just goes to show this is not new. People have recognised the need for this for decades. I'll also give you the private sector view. These governance principles came out 2002, 2003, and if you're listed on the stock exchange, you're expected to follow them. And there's item 7, recognise and manage risk. And again, BCP being a subset. So again, it's accepted good business practice. Now, why BCP? Excuse me again. Why BCP? It's part of good risk management. And risk management is all about building resilience. Let's explore that for a second. Here is a diagram showing the risk management journey, and I've been preaching for well over a decade now that the risk management journey is one from a position of vulnerability through to a position of resilience. Yes, we transition, we become adaptive, but ultimately become resilient. And if you're going to become a resilient organisation through the management of risk, ultimately you do need to have good business continuity planning in place so that you can recover from major disruptions. And the bigger the organisation gets, the more geographically spread it gets, the more likely that you are going to have a major disruption one day. Okay, getting buy-in. I've actually chosen to adopt some of adopt the approach that the Australian government has taken. They've invested quite a bit in organisational resilience, and if you Google organisational resilience and critical infrastructure for the Australian government, you will find quite a few papers. This particular paper that I'm about to refer to is got some nice case studies in it, so it's a well-written document. The the main point the government make that resilience is a choice, and I couldn't agree more. Survival is not mandatory. It's been said before me today. The choices that the government offer are decline, survive, bounce back, and bounce forward. Now, these are very similar to the ones I had for my risk management journey. Decline is at the vulnerability level, and if you're bouncing forward, you're certainly a resilient organisation. So it aligns quite nicely with my thoughts on the risk management journey being one to resilience. Just a bit of information on these choices. The first one they talk about decline. The example they give is a fire in a Philips electronics factory in Albuquerque, and how the Ericsson mobile phone manufacturer, the staff did not spring into action, and they suffered a $400 million loss. So more on that in a second. They come back into the equation in one of the other examples on these choices. Survive is the second choice, where we're not going to decline. We'll still be around, but we won't be in a particularly great position. And the example I've given here is an Australian one for Bankstown City Council, which is in southwestern Sydney. Fire in '97 where the whole council burnt down. I think the point here is that people did realise the gravity of the situation immediately and were able to bounce to action quite quickly. And with the leadership and motivated staff, they were able to recover pretty quickly. I think the inference is, despite good planning, pre-planning in terms of business continuity, a bounce back example that the government provided is the US one around Hurricane Katrina. And you can see here that Mississippi Power, because they had mutual aid agreements in place, they had done extensive planning and training of their staff and testing, I would expect. They were able to ramp up from 1,200 staff to 10,000 in just a few days and restore power in a relatively quick time frame, given the extent of the disaster. And then finally, we've got this bounce forward, which is an organisation's opportunity to take to actually gain from adversity. And again, this is the Philips electronics factory fire in Albuquerque, where Ericsson's competitor Nokia actually did respond quickly, and they actually managed to secure a significant share of the mobile phone market from Ericsson. So there are the choices. Decline, well, many small businesses have to rely on insurance only, and that might not be enough, and they'll just have to turn the lights out. But the bigger you are, the more you have an opportunity to plan for bounce back and ultimately bounce forward. And of course, and if you're a government, there's a strong expectation that you will be around very soon after a disaster. If you're a very large corporate, you can afford over a period of time to get yourself in a position that if a competitor is in a bad situation along with you, that you can actually come out of it better because of your planning, and you'll grow your business in the future. More on that later. Okay, so there's some interesting and good terminology from decline to bounce forward. I'm sure managers can understand that, but still it is such a challenge to get buy-in. Let's go through a few of the reasons. I think the first one is these things do cost money. It takes resources. The bigger you are and the more ready you want to be for a disaster, the more expensive it is. And we've all got competing priorities for where we're going to divert our funds. And unless management can see a good return on investment, it's hard for them to allocate the funds your way. Problem two is time. These things do take time. We're all pressed for time. These things often get postponed because other high priority issues without a disruption to business, or they're disrupting business in a business way. They get your priority, and these things get delayed. The third one is because often people make these things too complex. We try and get too fancy about it. And my belief is you've got to keep them practical and relatively simple so that people will engage with them. They might not be perfect in terms of detail if an event occurs, but at least you've got them and people are aware of them. All right, sorry, problem 4. Yes, I've already mentioned it earlier, we don't speak the right language. So we do have to tackle that in taking on this challenge of influencing and convincing business about investing in BCP. So how do I sell BCP to the business? Well, it is all about influencing. It is an art. Some of us are born better influencers than others. Others have had to learn it along the way. But you can master the art. If you master the art, you become a trusted advisor. So what is influencing? It's about lining up all the ducks behind you because they get the picture, they understand of where you want to go, and they'll follow you into the pond. That's what influencing is all about. If they believe, they'll follow. I'm going to give you 2 options. This first option is a challenging one. You need to grow taller, become highly attractive, and of course super charismatic, and tell them what they want to hear. Now, I'm not saying Richard Branson always tells them what they want to hear, but certainly he's got that charisma. And if Richard Branson was in talking to your senior exec about the need for business continuity planning, I'm sure they would be listening. Now, for those of you who might find it a little bit difficult to grow taller at your age, we're unlikely to invest too much on the attractive side, and charisma is not your forte. Let's go to option 2, and that is to get smart and follow a formula. So I've already explained that risk management is a journey, and I find that when you're talking to senior managers, if you explain it is a journey and that they're on the journey and where they are on that journey, it helps them engage and understand the pathway you want to take them down. And if you explain the end game, in this case for business continuity planning, the bounce forward position of organisational resilience, or at least the bounce back, then I think they get the picture. If they do get the picture, they're much more likely to support you. Maybe not immediately, but over time they will find the funds. And of course, as I've said a couple of times, speak their language and speak with credibility. We're going to explore those last 2, language and credibility, now. Okay, risk speak translators. That's my solution for when we speak IT speak or risk speak. And I'll just give you an example. Typical thing that either an IT person might say or a risk person might say is, at the moment, our recovery time objectives delivered via our IT DRP cannot meet our MAOs. Terrific. And the head spins of many a manager. Okay, what's the translation point? Well, it just so happens that this particular organisation has decided to turn around some bad news on customer service. So why don't we take it there and change our language to talk about example IT, reviewed our role in this customer service charter, and we've definitely identified some gaps, even if we have a minor disruption to our servers. Now, the minor disruption to servers is much easier for them to see, to imagine, and then you can take them down the path of exploring, well, how bad it could be if it was more than just minor. And once they're engaged, you've got their attention. So I'm suggesting to you, before you go into a meeting selling business continuity planning, selling resilience, think about your organisation, think about your manager, think about their pressures, think about the language they speak in or they use when they are talking with their peers, and try and adjust your language accordingly. Okay, speaking with credibility, well, knowledge is power, as they say. So I'm going to give you a couple of tidbits. Here's the first one. This comes from a company called Oxford Metrica out of the UK, who have invested quite a bit, particularly in the latter half of the last decade, on understanding the financial impacts of disasters particularly on publicly listed companies. And you can see here that they've been able to demonstrate that organisations that recover well, the blue line, are much better off in the long run than organisations that don't recover quickly after disaster. A couple of things you might think make sense there. For example, if management have recovered well, organisations are happy to back management because they say, oh, they've recovered from that disaster well, they're obviously good managers. The opposite would be true for organisations that don't manage so well. And then there's also, I think, one of the big differences is if you're in a growth industry and you're planning on growing, say, 30% next year, you've got a strategy for it. Well, if you've recovered quickly, you can get on with that strategy. Whereas if senior management's fighting fires and rebuilding and facing day-to-day challenges that they weren't planning on having for the next 6 months, then it's very hard for them to get on with implementing their strategy. So I think that's a big reason. You'll see at the beginning of the days of trading, you can see that the reds pops up and the blue drops down. And I've been asked, what's your take on that? And my best guess is that the blue line, that people actually understood the gravity of the situation and they've come clean and said, this is how bad it is. This is what we're going to do about it, and we'll keep you posted. Whereas I think maybe the reds, the non-recoverers, didn't actually know or understand how bad it was, and they've actually misled the market, and then had to come out later and say, well, it was worse than we thought, and this is what's happening. This is how we're dealing with it. Anyway, I don't know that for fact, but that's my explanation for that little blip. The next one is the iceberg principle, which basically is it came out of the Piper Alpha disaster, the offshore oil rig in the North Sea off the UK in the 1990s. The Health and Safety Executive of the UK investigated it and realised that because of all the other impacts on society and on the families and on the business and all the inquiries that occurred, they were able to demonstrate there's way more cost extending from the actual disaster than the cost of the disaster itself. And I've just put a little table up there that gives you an idea of, when you can have some direct cost, and because of insurance, for example, you can, you're only going to maybe lose the cost of your deductible. But then there's all these other indirect costs. Insurance, your business interruption insurance runs out after a period, maybe 12 months, 24 months, and you may still be recovering. The cost of redundancies, or just, we've got to renegotiate contracts because we can't deliver like we were. And then intangible ones. I've already mentioned that one of delay in implementing strategy. If you can't get on with your 30% growth strategy, the world is changing, your competitors are moving, it must have cost. So I definitely recommend, when you are thinking about your cost benefit or your business case for investing in business continuity, definitely go down the line of the indirect and intangible costs. I recommend you put some numbers there and let them explain why they're not there, or at least work with them to put some numbers to it. Because if you're just comparing direct costs, and often people say, don't worry, I've got insurance for that, that they in part are kidding themselves. It really does come down to a risk appetite decision. Are we willing to take that kind of risk of being a non-recoverer, of being impacted by all those indirect costs, or do we wish to be more proactive and be in a position that we ensure the longevity of the organisation? Moving on to the what is an effective business continuity plan? Well, here's a 5-step plan for you. Analyze, frame, develop, test, and maintain. Let's start with analyze. Well, that is in fact under the heading of business impact analysis. With business impact analysis, at the end of the day, what you're trying to do is understand for the critical processes of the business what business believes is the maximum allowable outage, how long before the impact on the organisation is so bad that it is totally unacceptable to the organisation. What is our recovery time objective, RTO? That is, well, at the moment, what are we planning to be back up and running in? And if the MAO exceeds the RTO, the maximum allowable outage is longer than the recovery time that we think we have right now, you get a tick. But if the recovery time is longer than the MAO, then you get a cross. And of course, you can choose different priority levels of minutes, hours, or days, weeks, months. So that's what business impact analysis is all about. And when you sit down with the senior people in the organisation, the finance people, the operations people, it doesn't take long to get the answers to these questions. Okay, you need to develop a framework. Picture paints 1,000 words. It just helps people understand how it all works if anything goes wrong. I like to run 2 sides to a framework. You emphasize team and you emphasize plan. People need to implement a plan. And I always emphasize that when you're writing your plans, you've got to understand that you may be sunning yourself in the south of France when the incident happens with your mobile phone turned off. Someone else has to pick up that plan and perform your role. But so the emphasis on team and plan I find is quite important. In developing BCPs, clear and concise templates, I try and make sure the starting templates for staff are as clear and concise as possible. You train them up in how to use these templates, develop their plans. You can handhold them a bit, but you can't write it for them, in my view, because they won't own it. And then through what I call a walkthrough exercise, you provide an opportunity for a reality check where you go through a simple exercise, all plans open, all just friendly discussion, exchanging ideas, before you then move into ultimately a testing of the plans. And in the testing of the plans, certainly I feel that most organisations, a desktop exercise is sufficient. Some large critical organisations, the big telecoms, I know for a fact, have done major live exercises, running over a course of a day. But for most organisations, a desktop exercise would suffice. You must get senior management there for the testing of plans. Otherwise, they don't understand the plans. They don't understand what's the thinking that's gone into the plans. They don't trust the plans. And if a disaster happens, they're quite likely to override the plans and lead you down a path you don't want to go. So try and get them at the tests. Invest in realistic exercises, absolutely. People get turned off if they don't get it. And if the more realistic the exercise, the more likely you're actually going to test something that may happen one day, and test the plan well. Don't make your exercises too long or complicated. Just turns people off. You're better off having a couple of tests with not that much time in between if you're worried about needing to test many elements of the plan. And then finally, maintenance. We think, generally quarterly updates, particularly of contacts, and with businesses change, you might need to adjust some of your processes. Annual testing, we find that over several years, a bunch of different scenarios, you develop quite a robust business continuity plan. And then if you've got an audit committee in particular, link it to audit committee meetings. So that's the sort of stick for the business to get these things changed, because everyone's busy. The incident's not going to happen this week, they don't think, so you can always wait till next week. Well, you need to change their views on that. Finally, the global trends. I don't think too many people listening would be unaware that there is a place called the cloud, and that of course is systems away from your premises, applications away from your premises, where you can operate your business from just via the internet. I'm sure you can talk to Always Up IT about that. They can talk more authoritatively than I can, but there is no longer any excuse for having data not backed up offsite. And the cloud offers great solutions. In fact, if you want to have a look at my blog, somewhere in there I've done a little equation, the risk versus reward equation for operating out of the cloud. People are key. Business continuity planning, people have understood more so than ever before that people are key. You can have your IT plans, but if you don't have people to operate them, or people don't know where they're going to go to access the systems or how, your plans will fail. You need to plan for big disruptions. Katrina, Cyclone Yasi over here, Christchurch earthquake, Japanese tsunami. Some events are very big, and Brisbane flood. You can't plan just for fire in the computer room. There are plenty of options for communication these days. Safety management system, SMS text messaging. You can send bulk SMSs over the internet, Facebook and Twitter, of course. When working remotely, the Microsofts of the world, the Googles of the world have plenty of options for online collaboration on projects, so people can continue to work fairly effectively from remote locations. There's a much better understanding of the psychological effects of disasters on people, and how ineffective people can be in the early hours and days after an incident, and that's got to be factored into plans. Client demand of supply chain. The further you are down the supply chain, you may not have experienced this yet, but there's more and more demand from people up the supply chain asking you, what is your plan when the flood hits? What is the plan when the fire hits? And so if you haven't been asked yet, you are likely to before long. And then finally, linking business continuity planning and incident management. I emphasised before that you don't have to have a disruption to the building, for example, to have an incident that needs to be managed. So I believe your plan should cover both. Now, some questions. Got a couple of questions here. One on the role of steering committees and on BCP programs. I believe that they need to ensure stakeholders' needs are met, the resources are not wasted, and they need to have a good understanding of the organisation. It's really like any project steering committee. Where do you find some best practices on BCP? Certainly the Australian government websites on resilience. New Zealand government has done a lot because of the high natural hazard risk over there. For the Australian government, there's Australian National Audit Office Better Practice Guide on business continuity. You can also go to the institutes such as the Business Continuity Institute and, of course, the Risk Management Institution Australasia, which I am the current president, and highly recommend the resources you can find at those organisations. The finance industry has done a lot on business continuity planning, guided by APRA, the Australian Prudential Regulation Authority. So I'd also recommend you try there. How long does it take to develop a business continuity plan for a medium-sized organisation, say 400 employees? Well, I think about 3 months is the norm. You need a few weeks for the BIA, a few weeks for agreeing framework and templates and training people up. Then they've got to fill them out. Then you've got to come back and do a walkthrough. Then more filling out, then testing. I've done it maybe a little bit shorter than 3 months, but 3 months would be the norm, and often longer because it is hard to get people. I think that's all we've got time for. It's been a pleasure. I look forward to interacting with you guys more so in the future, and enjoy the rest of the day.